Hello, my name is Rob Poterucha and I'm a tax supervisor here at McGowen Hurst Clark Smith. Today's topic that we'll be covering is Iowa tax reform and the changes that Iowa had as a result of the Federal Tax Cuts and Jobs Act, which was passed late in December of 2017 and greatly impacted the federal tax code, but as a result of that also impacted Iowa. Since it was passed so late in 2017, Iowa hardly had any time to pass the things that they needed to pass to get it in place by the 2018 tax year. As a result, only a couple provisions were in place by 2018, with many of the things not being placed in service until 2019, and a lot of them not until 2023, also subject to certain revenue triggers. The first thing I want to talk about is Section 179, depreciation. This is a way to write off capital improvements that are normally depreciated over time in the year of purchase. Iowa's usually had a smaller number than the federal number as a result of the Tax Cuts and Jobs Act. The federal number in 2018 was $500,000, which means you could write off a piece of equipment up to $500,000 in the year of purchase in 2018. For Iowa, that number was only $70,000. In 2019, that number is going to increase to $100,000. And then in 2020, we're going to have the same number, the same limitation for both federal and Iowa. The next thing I want to discuss are tax rates. So in 2018, because the Tax Cuts and Jobs Act was passed so late, they didn't have time to lower the rates for 2018. So the 2018 tax rates were the same as they were in 2017. In 2019, there's going to be a slight decline of rates, and it's going to be the same rates for 2019 all the way through 2022. And then in 2023, subject to certain revenue triggers, the rates will decrease and there will be fewer brackets as well. Also in 2023, subject to those same revenue triggers, federal deductibility will also go away if those revenue triggers are met. And the next point I want to discuss is the Iowa Research and Development Credit. This is a credit for taxpayers basically to incentivize taxpayers in certain industries. And it used to be very broad, but as part of the tax bill that Iowa passed in 2018, they limited the number of industries that were allowed to take this credit. Some of the industries that can take this credit are manufacturing, life sciences, software engineering, and aviation and aerospace engineering. One industry that they left out that really hurts Iowa taxpayers is the agriculture industry. Previously, ag-related industries, companies could receive a tax credit, but they are no longer able to receive a tax credit under the new rules. And then lastly, doesn't really have to do with the tax bill that was passed in December of 2017, but want to touch on sales tax. So in 2018, sales tax really had a game-changing moment with the case that went all the way to the Supreme Court called the Wayfair case. It basically allowed companies without a physical presence to be subjected to tax in certain states. So for example, if you're an Iowa retailer and you sell things online to a person in Missouri or Illinois, you might have a Missouri or Illinois sales tax obligation. You might have to charge your clients sales tax. Almost every state has responded to this, and more are jumping on the bandwagon and forcing out-of-state retailers to charge sales tax because it's an easy way for them to generate a little extra revenue. And so it's important to note you do not need physical presence. In the past you did, but now you don't. So that's really important, and it can cause a lot of headaches for compliance because sales tax can be very detailed and very complex depending on the state. So that wraps up our Iowa tax update. Reach out to us on our YouTube channel. Please like and subscribe. We have a bunch of different topics that we've covered. If you have any questions, feel free to reach out to us. We're always here to help.